As expected, the Fed cut interest rates again today. It is Thursday, November the 7th, and we are just a couple days after the election, and the Federal Reserve did deliver the interest rate cut that was priced into the market. They cut interest rates by 25 basis points to a range of 450 to 475. But let's take a look at some of the comments that came out of not only their statement, but also Federal Reserve Chairman, his press conference. So first of all, in their statement, they did remove the reference of them gaining confidence on inflation. Instead, they said that the inflation has made progress towards its 2% goal. They did continue to mention that the risks between employment and inflation are balanced, but that removal of them gaining confidence has raised some eyebrows, not necessarily for the bond market today, but it has raised some eyebrows. And we've been discussing that some of those sticky inflation indicators have remained elevated. They did make a mention that the economic data since they last met has actually come in stronger than expected, so it's taking away some of the downside risks. They also mentioned that they would continue to be meeting by meeting. They said that by December they'll have more data on inflation and employment, so December is not necessarily set in stone. That's still up in the air. They're going to look at all of the incoming data. Right now, they continue to say that they're just recalibrating the monetary policy from this tight level. And there was some questions in the press conference about the incoming administration. And what they mentioned was that in the near term, this election and its results have no effects at all on policy decisions. They don't comment on fiscal policy, and they will factor it into the models when any laws pass. So at this time, they're not factoring in any of the campaign items from the Trump administration, which they shouldn't. Let's see what we get into in 2025. One of the things they did mention, though, is that from the risk side, is that geopolitical risks still remain very elevated. And it does put what they're concerned about is if it filters into the oil market, that could have upside risks to inflation. They also did make some mention about fiscal policy being on an unsustainable path. Now, how's the market dealing with this today? Honestly, the bond market's rally. So we're seeing yields actually slightly lower, but let's not forget that yesterday we saw a big rise in interest rates across the curve. So this may be just giving back some of what we got yesterday. The equity market is up a little bit. It's been kind of flat most of the day, so they're not taking much out of this. This was expected, so there's no big surprises here. We'll continue to monitor this data coming forward to try and get a better idea of what may happen in December. But right now, there are some of the futures market that's pricing out interest rate cuts for December and possibly pushing them into January. That's all we have today. If you like this podcast, please subscribe, hit that alarm bell, share it with friends and colleagues. And as always, if you'd like to see any of our history of our podcast, please go to marketswithmegan.fm. Thank you.